Blockchain is the technology behind Bitcoin. Some call it a distributed ledger, others call it a trust system, and a few refer to it as the Internet of Value. All of the names above are correct. But what's the fundamental economic idea that makes blockchain helpful? How does it affect the global fiat money? Stay tuned and keep watching till the end to find out. Value is subject to scarcity. Gold, diamonds, and sometimes even water becomes valuable as it becomes scarce. In the digital space, we are used to abundance. Google gives you unlimited information. You can upload as many photos to Facebook as you want. Wikipedia is a free encyclopedia. You can write an email and send it to 1 million people, and so on. Limitless, free access to information, and your ability to reach millions through platforms like Medium, Twitter, and YouTube has eliminated information scarcity and transformed the business of libraries, books, and newspapers. What does blockchain do? It reverses the above. It's a protocol for digital scarcity. By removing a central authority that can increase supply and therefore destroy the value of a digital good, blockchain proposes a new approach to assigning and preserving the value of ones and zeros stored in an online ledger. Let's call this new scarce good a digital asset. It has value because there is a social consensus. Everyone says it has value. Why does everyone agree it has value? They believe it is scarce, cannot be replaced, and no one can destroy it by creating more. Bitcoin is the most famous blockchain-based digital asset, but not the only one. Blockchain is the Internet of Value, and it will unlock over $100 trillion worth of financial opportunities for everyone. Underestimate it at your own peril. Ignore it, and the world will ignore you. The fiat currencies have all been debasing over the years because of inflation. Before, the only hedges were the stock market or precious metals. Now, there is an alternative, and it is cryptocurrencies. No government or authority can control Bitcoin, and a hard cap, aka max supply, exists. Bitcoin is currently on all-time highs in 14 fiat currencies. These currencies from different nations represent more than 1 billion people and covers about $7 trillion in GDP. Some of these nations include Argentina, Japan, Pakistan, Sierra Leone, and Sudan. The total population from these 14 countries makes up more than 13% of the world's total. In addition, Bitcoin's growth is not limited to domination of other national currencies. From reliable data, Bitcoin has also surpassed TLT, the US Long Bond ETF, and the KRE, S&P Regional Banking ETF. The singular implication of this is that Bitcoin has all it takes to serve as an alternative to traditional financial assets. Fiat money is a government-issued currency not backed by a physical commodity, such as gold or silver, but rather by the government that issued it. The value of fiat money is derived from the relationship between supply and demand, and the stability of the issuing government, rather than the worth of a commodity backing it. Most paper currencies are fiat currencies, including the US dollar, the euro, and other major global currencies. Sadly, fiat money has consistently failed. How does cryptocurrency affect the fiat currency? When you look at Bitcoin, the most well-recognized of cryptos, you see that few people accept it as an accurate medium of exchange. However, it has become possible to live with Bitcoin in any Western city of your choosing without using the domestic fiat currency. All you have to do is pay with cryptocurrencies, and a good example of this is the Bybit debit card. If you are interested in this, you can find a referral link in the description below. Now, let's move on. Also, there is the fundamental analysis of cryptos. It has value purely because everyone else thinks it does. Sure, it is scarce, but that is not a sufficient condition to import value. Saying cryptos are at the same standard without any long-term proof would be delusional. So, could cryptocurrencies have the power to replace cash and fiat currency entirely? Let's start by looking at what a crypto takeover could look like. Currencies are only as valuable as people think they are. So for a cryptocurrency to become a stable household currency, we would need to see levels of consumer interest and adoption far above where they are now. We are seeing more businesses accept Bitcoin and other cryptocurrencies, and assuming consumer interest grows, that acceptance will only increase. At some point, the prevalence of digital currency will make online shopping even more attractive, and physical stores will need to adapt it to catch up. That way, the war between physical and digital retail will continue. Other industries, like finance, might gravitate to more crypto-oriented products and services, creating a feedback loop that responds to and creates customer demand. Governments have a vested interest in keeping their fiat currency active. They can directly control it and have an enormous impact on the economy. They won't be incentivized to accept cryptocurrency, so countries like China are locking down on Bitcoin altogether. Still, as more consumers start trading cryptocurrencies freely, governments will need to start imposing stricter or better defined trading regulations and will be forced to acknowledge the currency. So why are we even considering this as a possibility? Why would an all-crypto future be good for us? One of the most significant advantages of cryptocurrency is that it is completely decentralized. Every crypto system relies on a complex, interconnected network of users to manage the system. No single government would be able to seize control of the system, nor would any single player be able to take advantage of it. For years, the American penny has cost more than 1 cent to create, 1.5 cents as of 2016. While fiat currency ultimately depends on consumer trust to hold its value, it still costs money to print and mint new currency and manage old forms of currency. Since cryptocurrencies exist only in a digital environment, these costs could be eliminated. Cryptocurrencies rely on the blockchain to acknowledge and verify the legitimacy of every transaction. This makes it much better protected against fraud than cash or any other traditional currency exchange method. Granted, fiat currency could adopt a blockchain-style exchange. However, that would make it a digital currency. While many people are still skeptical about cryptocurrencies, El Salvador quickly adopted them as its nation's legal tender in September 2021. This singular action has drawn attention and generated mixed reactions. Making Bitcoin's legal tender means a payee must accept them, and every economic agent must accept Bitcoins as payment for goods or services. Everyone sees El Salvador's Bitcoin experiment as a failure so far because of the Bitcoin bear market. For those who don't know, Bitcoin is a volatile asset whose value changes with time. A key factor in Bitcoin is the mining of new coins, and after every 4-year cycle, the mining gets halved, known as halving. Before the last halving, it was around $10,000, which went to an all-time high after a year, reaching $60,000. This is a massive 6 times the price within a year. The next Bitcoin halving event is expected in April 2024. By that time, we'll make a significant profit on its investment. Besides that, the move is already transforming El Salvador's image and has sparked a boom in tourism. A lot of global crypto investment is making its way to lift it out of poverty. El Salvador has even returned to its pre-pandemic numbers in tourism due to the publicity from Bitcoin. The country is working on realizing a Bitcoin bond and working on a Bitcoin beach for tourism. The future looks promising, but to what degree? Only time will tell. Meanwhile, there is also the issue of ETFs, which are popular because they make it super easy to buy and sell little chunks of things. The exchange-traded funds, ETFs, that everyone has been looking forward to in the United States was officially launched in January 2024. Out of a total of 35 new ETFs, 9 new spot Bitcoin ETFs were also included. In the first 3 days, the spot Bitcoin got a whopping $1.9 billion in asset inflows. That's it for now. Most important of all is to keep yourself educated. Thanks for watching. Don't forget to like, share, and subscribe to this channel for more content.